Now to the Fed and what investors should expect from the central bank. We've been talking about the Fed all morning. Senior economics reporter Steve Leisman joins us with the latest. Hey, Steve.
Hey, good morning, Andrew. Friday brought out a chorus of Fed hawks and some doves, with Fed communications sounding increasingly chaotic. Beth Hammack from Cleveland, Lori Logan from Dallas, Jeffrey Schmidt from Kansas City, all three opposed that October cut and cast doubt on whether they would support a December reduction. Only Schmidt is the voter there now. Their basic argument: the economy has plenty of momentum. Inflation is running above target. Schmidt says it's spreading, and there's no signs of tight Fed policy anywhere in the markets. Meanwhile, Fed Governor Waller, a leading contender for Fed chair, and Governor Stephen Miron, on loan from the Fed to the Fed from the Trump administration, both spoke in favor of further cuts, while Powell said the Fed would slow down in the fog. Waller responded in an interview, "The fog doesn't tell you to pull over to the side of the road," advocating there for a December cut. And Miron, who has now dissented twice in favor of 50 base point rate cuts, said the U.S. risks recession if the Fed doesn't cut. Lots of Fed speakers this week. I count 11 of the 19 Fed members talking. Not all of them talking directly about the economy or monetary policy, but it seems like sometimes they've been stepping out of their regularly scheduled topic and making some comments about it. So just about every day this week, there's somebody talking. Wednesday, though, may be the most important day of all. We get the ADP data, and many Fed observers think it's going to take definitive jobs data either way to bring the committee together in order to cut rates. Andrew?
What did you make, by the way, separately? We were talking to Tom Lee earlier just about some of this repo action recently that the Fed's been pursuing with some of the banks. Should we be anxious about that at all, or no?
A little bit of tightness in the markets. The Fed's trying to feel its way, Andrew, into what the right level of reserves is, and they're going to be stopping that quantitative tightening. And as I asked Powell last week, they're eventually going to resume putting a little liquidity back into the markets. It's not QE, but it will be some increase of the balance sheet to go along with the increase of the economy. Not sure when that's going to happen. You get to quarter ends and month ends and things like that, and you get some action out there. It's an interesting time to watch it. Powell kind of played down the importance of this, and we haven't seen too much example of that. You know, we had a flurry a couple of weeks ago, so it's something all we can do is watch it, Andrew.
And then, Steve, if your betting line on December, I mean, I know the betting line, but I'm curious about the Steve Leisman betting line.
I'm not going to make a bet. You know, sometimes you watch the odds till they say there's the horses are in the gate. I really want to see the jobs data. This idea out there from Schmidt and others that the economy has plenty of momentum. And I don't know if you saw last week, Andrew, I don't remember if you were in the office when we had that special weekly ADP report that we're going to get this week. Yep. We get the regular ADP report, and next week we'll get a series of weekly ones that showed there was a turnaround in the job market. And plus, you know, we're following these jobless claims numbers, and they're very low. So I really think what all the Wall Street houses that are predicting this December cut, many of them are, they're saying we're going to get definitive jobs data showing weakness that will cause the Fed to do that. I want to see that data, and if you don't mind, then I'll make my bet.